Hi, if you're just joining us, we're waiting a few minutes as more people come in. Thank you. Okay, thank you all for joining us today. I'm Denise and I'm with the OLISA team. We're very grateful that you're sharing your time with us. And I am very excited to present to you all to our speakers for today. So today we'll be going over walking with Native CDFIs. And so everyone, you do have the ability to unmute and mute yourself, and you also have the ability to type into the chat. So if you have any questions or just want to jump in, please go ahead and use those features. And with that, I'm going to go ahead and turn it over.
Thanks, Denise. My name is David Glass. I'm with the Northwest Zone Manager for the Division of Capital Investment. I have with me today my boss, Chief of Division of Capital Investment, David Johnson, and also my work colleague in the Northwest Zone, Raphael Eubanks. It wasn't hard to come up with this idea for the title for our presentation today. Walking with Native CDFIs, as we really do as an organization, want to reach out in a good way to CDFIs, Native CDFIs, and invite you to be part of our program as a guaranteed or certified lenders in the insurance program, and if you're eligible in the guarantee program. Before I start the walking through the slides here, I'd like to invite David to say a few words to start us out, and then he'll actually come back and help close us out at the end.
Thank you, David. David Johnson again, and it's an honor to be here and to participate in this event to spread the word of our very small program. It's part of the Indian Financing Act of 1974, so we've been around for a long time. As a very small program, we are nonetheless very persistent. Over $2 billion of loans have been made through our program, backing them up since inception. And we've picked up some steam in more recent years. We are particularly excited about the potential for CDFIs, which were specifically authorized to be lenders in our program by Congress in a change to our statute in 2006. And so CDFIs are an integral part of the future we see for our program, helping Indian country to secure financing. As David suggested, you can be either a loan guarantee lender or a loan insurance lender, or both. The qualifications and method of becoming an approved lender for our program are very simple. I'll let David go into all of that for you, but with that, I will give it back to David, and he's the Northwest Zone Manager for our program. We have 4 zones. He covers the area that goes roughly from Michigan to Colorado to Washington State, an area which we've calculated to be somewhat larger than Argentina. He and Raphael do that ably, and I will let him tell you about our program.
Thanks, David. And also I wanted to thank Denise and Oista for inviting us into their home and to speak to the Native CDFIs. The work that you folks do with Native CDFIs in economic development and the services you provide are so important for our communities from coast to coast, border to border, and including Alaska, that it's Native CDFIs would be a hard time, would be hard to replicate without your assistance. So we recognize that, and again, say Chimigwich for the invite today. Having said that, Raphael, you want to say hello real quick? And
Sure. Yeah. Raphael Eubanks. I am a contractor hired by Flatwater, but have been working with DCI in the Northwest Zone for the last 2.5 years. Just reiterating everybody's comments so far. Very appreciative to be here today, talk to you more about the program. We are excited about this presentation, and hope you find it entertaining as well as informative. And want to pass along the invite. We will certainly take questions at the end of this presentation, but if you have a question that comes up while we're presenting, please feel free, send in a chat, or feel free and just interrupt us. We want this to be as interactive as possible, so that we can have all your questions answered. So thank you again.
thanks, Raphael. Think of the three of us, Raphael and I, as the broadcast folks, and David is doing color. And David, feel free to pop in anytime and correct us and or add to it. And also the audience, if you have questions, like Raphael said, as we get into our slides, if you want us to stop and discuss any particular topic in or slide or issue, we'd be more than happy to do that. And we'll take questions at the very end. So with that, the first slide just lays out the program. We're a legislative program underneath 25 USC, 25 CFR Part 103. And if you Google that up, you'll come to our regulations page, and you can read the regulations that lenders and borrowers have to follow in terms of using our program. Really quite easy. I always like to say we're one of the, if not the easiest program in federal government. Boy, we're close to it in terms of accessing and utilizing. The Indian Loan Guarantee Program works with the Division of Capital Investment, DCI, underneath the Office of Indian Economic Development, Indian Affairs, Department of the Interior. Next. Who is DCI? I thought you were BIA. I can't tell you how many times I get that question. And the Indian Loan Guarantee Program did at one time at the very beginning reside with the Bureau of Indian Affairs, and they ran it. And in about 2004, 5, 6, I think it was probably finished. It became a standalone program underneath the Division of Capital Investment. Next. The program is no longer under the purview of the BIA, standalone program with DCI Indian Affairs. And what we do is we help tribes, individuals break through conventional financing barriers for both. And next, you can hit them, and then you hit it. Yep. We're not a grant program. Rather, we help borrowers obtain financing that they might otherwise be having some issues with for a variety of different reasons, where their deal rises to a risk level where lenders don't feel comfortable in giving the loan and getting the closing. We come in, we guarantee it or insure it, whatever the case may be, and the project can move forward in the closing. The program helps to reduce the risk to the lender so that borrowers can secure the funding. And we hope, or what we try to do, is bring both together so that both may prosper. Next. The common features of the loan guarantee and insurance program is that one is a 90% guarantee on the outstanding principal, unpaid interest, and authorized fees of the loan. The authorized fees that the lenders pull together, if there's attorney's fees, depending upon the largesse of the project, etc. Can use our program: any federally recognized tribe, Alaska Native group, their individual members, their organizations, both for-profit and non-profit, are eligible to participate. For the projects, borrowers need to be at least 51% Native owned, And that can be with one person or multiple people involved. And for nonprofits, the board has to be 51% Native controlled, so to be eligible. To date, we have the time-honored equity piece that says that the borrower needs to put skin in the game, and so there's a 20% equity requirement. That can be either cash in the project and or depending upon if it's construction project, if the project appraises out for 20% more than the borrowed amount, that can work also. But you know, when you have borrowers that come forward and you have questions about the equity or collateral pieces, you know, you can get a hold of anybody depending upon where you work in Southwest or the Eastern Zone, Alaska, or Northwest Zone. We're always available. We do answer our phones and we can give you callbacks. You know, most of us do within 24 hours if we don't pick up because we're busy. So always available to answer any kind of questions. The loans that we guarantee or insure can be used for operating capital, equipment purchases, construction, business acquisitions, refinancing, lines of credit, and other business needs. For individuals, the loan limit is $500,000 or less. The program limit to loan amounts for tribes and business entities consisting of at least 2 people, the ceiling disappears, and then it becomes a matter of what kind of funding we have, the type of project, and what the credit committee thinks of the request. So, but that $500,000 disappears. When we have folks that come forward and need 600 or 800 or 900,000, you know, I usually encourage them to look at family member or partner to give them a certain percentage of their business, make them an officer. The structure becomes a LLC, S Corp, C Corp, or whatever, and we can get to that other number. Most lending organizations under the program, including U.S. Bank CDFIs and some non-bank lenders, are eligible typically. And really, we have a probably the easiest application becomes certified underneath of all the programs. It's a 1.5 page read and signature for a lender, just in mostly stating that you've read 25 CFR 103 and you'll abide by those regulations. And we take a look at the health of the financial health of the institution, and we move it forward. Next. Some of the loan guarantees and insurance questions are going to be covered by Raphael right here, and I'm going to get rid of this phone. Sorry.
Yeah, I'll go ahead and take over. So that slide that David just ran through again is more of the common features between both our loan guarantees and our loan insurance. I'm just going to go over kind of a few of the key differences that you'll see between a loan guarantee or a loan for insurance. For loan guarantees, any authorized guaranteed lender can apply for a loan guarantee. All those loan requests are submitted to a zone manager, which will be reviewed and then brought forth to our DCI credit committee. At that point, our credit committee will vote on whether or not that loan would receive a guarantee. There is a 2% premium that goes along with submittal of a loan guarantee. Now with loan insurance, working with CDFIs, Native CDFIs, for a given fiscal year, a pre-authorized insured lender or CDFI will be given a level of coverage for that fiscal year. Any loan then that's $250,000 or less, you can go ahead and actually close on that loan, submit the documents, all the documents to us, and we'll go ahead and insure that loan after the fact. It does not need prior DCI approval, does not require credit committee approval. Now, any loan that would be over 250,000, that does require pre-approval. So submitted to us prior to review, prior to credit committee review. Once that is reviewed and is approved, then that would be insured. A difference on that as well, then premium for the loan insurance is 1%. Next slide, please. Another key difference between the two programs are in the event of a default. For loan guarantees, the lender has the option to either liquidate all the collateral before submitting a claim for loss, or just submit a claim for loss right away and receive payment on the loss. That payment would be based on the guarantee percentage, which is up to 90%. Now, for insured loans, it is a requirement that the lender must liquidate all collateral first. Once that's done, then you may submit a claim for loss on any of the remaining debt. And that payment on that loss is limited to the lesser amount of either 90% of the lender's loss on the insured loan or 15% of the value of the lender's entire portfolio of the program insured loans. And that's really kind of an incentive to grow your portfolio as a CDFI. The more loans that you have out, the higher percentage that you would essentially be covered on a loss. Next slide, please.
Getting started, I'll take this. Thanks, Raphael. How do we get started with our programs, whether it's the insured loans or the guaranteed loans? The borrowers apply for a loan to the lender of their choice. I receive phone calls regularly from borrowers, startups, existing businesses, and tribes. What I encourage them to do is to look in their own backyards for lenders if they already have a relationship, and it's a good relationship with the lender. You know, I encourage them to talk to their lender, tell them about our program, that we can, you know, help out with insuring the loan and or guaranteeing it up to 90%. And if they'd like me to talk to the lender and bring them on board as a certified lender, we can get that done rather quickly. It's not a, you know, 3 or 4 week or 6 week process. Like I said, mentioned earlier, the lender, you know, goes, reads 25 CFR 103, gets the 1.5-page application, acknowledges that they've read it and will abide by it, sign off on it. I receive it, send it to Washington, they sign off on it, and after I make a recommendation, and if they're a certified lender, that can happen in a matter of a few days or a week, but typically it wouldn't take that much longer. So it's a fairly quick and easy process. Next. And you can hit the next 3 or the next 2 or the next one. Yeah, that's good. What we encourage lenders to do is only apply for the guarantee or insurance when it would not otherwise approve the borrower's loan application. And some of the necessary steps would be that the lender would be to accept a business plan and a completed loan application. The lender must submit Indian Affairs Form RG I-1 or 10, and we can provide that to you lenders, and you can just make copies of it. The lender must include the proposed loan terms, all the materials, anything that you usually use for your underwriting. And they're, you know, all lenders basically use the same template, same format. Those are the things that we require in terms of either insuring or guaranteeing the loans. It comes to our credit committee, they take a look at all this information that you've supplied for us. In the information from the insured lenders gets deposited in a federal loan management system so that we have all the forms handy. If something were to go south, then we'll come back in and take a look at those forms, making sure that everything was followed in terms of closing on that loan. Next. If a loan is for, and Raphael did cover a little bit of this, if a loan's for $250,000 or less with the insured loan, it can be approved and go to closing without any kind of approval from our program. It's really the CDFI that their board, they approve it. They send us the documents, send in the 1% premium, and it becomes an insured loan. And as David said earlier, certain CDFIs, depending upon the size, can become a guaranteed certified lender and also a insured lender for their smaller deals. So or they can choose what works best for them. You can do that in discussions at your board level or at your senior staffing level or staff level, and bring it to us. If you have any questions, we'd be more than happy to answer them. And if you have, if you'd like us to sit in on a discussion with you and other folks at your CDFI, senior staff, board level, whatever, we'd be more than happy to do that also. Next. The next piece here is we do have some frequently asked questions that pop up all the time. Raphael's going to take these.
And Denise, go ahead. I think there's 2 more bullet points. I think, yeah, you can go ahead. Apologize. That looks like it's kind of hard to see. And if anybody is interested in some of this information, we're more than happy to share this with after. But again, some of the frequently asked questions, we have kind of covered a majority of this in the presentation, but it's always good to reiterate, very often we get, how do I obtain a guarantee? Again, a borrower comes to you as the lender looking for that loan. You go through the normal underwriting process and understand that you're unable to make that loan without a guarantee. You submit that loan application with your documents to us, to our zone manager, depending on where you're located, where that business is located. You just send it to that particular zone manager, who will bring that forward to DCI's credit committee for review. Where and when do I apply? Again, kind of touched on that a little bit. Those complete applications are sent to the zone manager, depending on where that's located. There must be a statement on why you as a lender are unable to make that loan without a guarantee through the program. But again, once that complete application has been received, we're usually pretty good at getting those turned around in about 30 to 60 days. For CDFIs, that process can be even quicker. Again, if that loan is under $250,000, you can go ahead and close on that loan, submit the application to us and the premium afterwards, as long as it follows the regulations. Again, under 25 CFR 103, that loan will be insured. And then what happens after the loan has been approved? Again, for guarantees, we will sign a loan guarantee certificate and attach with that a mutually agreed upon conditions of approval. That certificate is essentially not valid until the loan closes and the premium payment has been received. And we can work with you on that closing process and that time frame. It does happen that loans take a little bit longer to close. We'll work with you on that process. Go ahead and move to the next slide, please. And then I think there's 3 on this one too, and you can go ahead and drop them all down. Great. What types of loans are eligible for the program? Again, we kind of discussed that earlier. I think for this purpose, it's important to highlight some of the types of loans that we don't guarantee at this point. Essentially, loans cannot be made for any type of relending purposes or gaming purposes. We don't insure or guarantee smoke shops, liquor stores, or any type of cannabis-related operations. Next question would be, do all financial institutions qualify? And yes, most CDFIs, including native CDFIs, and essentially almost all US-based commercial banks qualify for participation in this program. Non-bank lenders can also be eligible, but they must meet requirements of 25 CFR 103.10. Whether you're choosing to be a guaranteed lender or insured lender, you must sign either a loan guarantee agreement or loan insurance agreement, or both, before that participation can occur. And essentially, the only institutions that aren't eligible at this point are credit unions. I guess the caveat on that are credit unions are eligible if they have CDFI status. And then kind of the last frequently asked question that we do get quite a bit is equity required by the borrower? Again, we did touch on that at the present. It is at least 20% equity in the business being financed. And that's immediately after the loan is funded. And again, as David mentioned earlier, if a substantial portion of that project involves construction or renovation, and then at the completion of that, the appraisal comes above the actual project cost, you can use that equity as part of that equity injection into the project. So next slide, please.
Some of the projects that we've worked with over the years, I mean, they vary in terms of in Indian country has developed in it's going from C-stores, gas stations. Now we're doing all sorts of from one end of the spectrum to the other, from C-stores and gas stations to hotels, to bookstores. You can think of any kind of business. We've probably been approached by it and have a guarantee or insured that loan. So there's a Lavender's Blue literacy market in Tulsa, Oklahoma. It offers tutoring for literacy, including specialization in dyslexia and special ed. And it has event space for theme-specific parties and events. We've that was a insured loan through the Cherokee Nation Economic Development Trust Authority. Next. And we've also worked with Native Capital Access, Spirit Mountain Roasting Company. It's a coffee roasting company based in Winter Haven, California. And it has all Native staff. So that's a plus. And the coffee is roasted to order and shipped anywhere in the United States. So if you're up for a good cup of coffee, Google up Spirit Mountain in Winter Haven, California, and put in an order. Keep that money flowing in the Indian country. Next. And I love the coffee cup there. If you notice, be a good ancestor. Another small business that we help breathe life into in Indiana, Chiishibak, which is located in Michigan. This is a virtual reality center, and it's a family entertainment center specializing in virtual reality and social gaming. Mishawaka, Indiana, and that was relative. I think that's within the last year, if I'm not mistaken. Am I right, Raphael?
Yeah, a couple years old now at this point, okay. But yeah, they've really blown up. Obviously, gaming is huge, especially with kids, but virtual reality is kind of a growing sector, which they're really able to capitalize on.
Nice. Next. Paisanos Paccia, a restaurant, Italian eatery in Rapid City, South Dakota. Owner is Stacy Livermont, and worked at the restaurant for 20 years before working with Lakota Funds, a Native CDFI, Rapid City. and they bought it, and Stacy bought it from the owner and is doing really, really well, and still at it, still doing well, and we are happy to be able to help Lakota Funds fund this program. Next. Those are some of the insured projects, the past 3 that we've done. We've got, we worked with a bank out of Michigan, and it's with the Little Traverse Bay Band of Odawa Indians. And interestingly enough, this Marriott Courtyard project, 144 unit Marriott with a 6,000 square foot retail strip mall, came to us, and I think they opened in November or December of 2019. So they had their grand opening December, and they had January, February, and March hit. And what happened? COVID. But this project in Petoskey, Michigan, continued performing at a really fantastic pace. And they finished 2020 with profits. And because they've done, you can go to the next slide, and then it'll show you, we'll have another picture of it. And this is Victory Square in Petoskey, Michigan. You see the Marriott in the distance. This is the 6,000 square foot retail strip mall anchored by T-Mobile and on one side, and the Starbucks on the other, and something in between. And then the other one is a Boston restaurant, the other building over here. So this was the dream of the economic development arm, the management group of the Little Traverse Bay Band of Odawa Indians. And they've been so successful with this project, even during COVID, that we're talking to them right now, and they're looking to do another project. They have 22 acres to work with, and they are looking to put up another hotel and do another strip mall. And so we hope they could be able to get that application into us by August, September, later this year, and get it through our credit committee. And hopefully they can break ground yet this fall, and target a spring opening in 2022. So we'll see, or fall opening in 2022. The next project that we're going to take a look at, Raphael is going to talk about, is the Margaritaville, and that's opening in 2022. Take it away, Raphael.
Perfect. And I think before I touch on this project here, I think it's always interesting to me, or has been interesting for me, and I think to get an idea of kind of where our program fits in all this. You've seen, gotten a little bit of picture of some of the insured loans that we've done, and there are a lot more out there. Real small picture of some of the guaranteed loans that we've done, and there are a ton out there. On the insured side is generally where we see some of the smaller loans, but even still getting into some pretty big projects, opening up businesses, taking over ownerships of restaurants, stuff like that. We've even had loans come in, I think, in our zone recently as small as $3,000, for the individual Native entrepreneur that's wanting to start their own endeavor. And again, even through the insured side, you can get loans, as large as $250,000. On the guaranteed side, I think how much was the
This
courtyard?
was 20. This was the Little Traverse Bay Band of Odawa Indians was a $25 million project. This was an $18 million project.
And on I think the largest loan that has been guaranteed to date was a $55 million loan. But anywhere along that spectrum, if there's a project that's out there, we have a fit for that. So another hotel project here that David alluded to. This was a Compass by Margaritaville hotel that's in the process of being built right now. This was a project brought forward by the Coco Indian tribe and their economic development wing. David worked with them for quite a bit on this project. Very, very cool a hotel that you'll get a chance to see here in a minute. They have land down in Medford, Oregon, that they've had different uses for over the years. As you'll see in the video, they term it as kind of underutilized property, but they're really working on developing that land, starting with this project. Aspirations to potentially build a casino down there. I believe they have a golf course down there that they want to kind of spruce up, add some renovations, and just really, really, develop their economic wing here. So we'll get a chance. We'll take a look at this video and talk a little bit more when it's done.
Before we watch the video, let me just add one thing, Raphael. When we brought this forward to our credit committee, the banking industry, it was right in April, May of last year, right at the beginning of COVID, and it was decimating our country, all of our industries. But our division did not give up on Indian country and the vision that different tribes and or individuals had. We brought this forward in April, May, when other lenders, large lenders, were telling folks, no, thank you, we're not doing these kinds of projects right now. We don't have any idea what's happening. But we work closely with the tribe, and we work closely with the lender, the bank out in Seattle, and we're able to bring it forward, get it through our credit committee, and they broke ground. They're opening up they hope to open in February, March of 2022. Go ahead. If you can hit the start button, Denise.
Yeah, and please let me know if you don't hear the audio.
Pardon?
Let me know if you don't hear the video. Just so
Okay.
I think I did it right, but just in case I did it wrong, let me know.
Can you pop it up a little bit?
Just as the Coco tribe transformed other underperforming assets in Southern Oregon into vibrant cornerstones of economic development and job growth, the Coco tribe is transforming underutilized property in Southern Oregon into the first West Coast Compass by Margaritaville. With the help of the Office of Indian Energy and Economic Development, Division of Capital Investments, the tribe has entered into a franchise agreement with the Margaritaville brand to create a brand new boutique hotel experience, which will be the tribe's newest hospitality endeavor, creating much needed jobs for tribal members and local community members, economic investment in South Medford, and bringing the Jimmy Buffett Island way of life to the Rogue Valley. Once the tribe received approval from the Division of Capital Investments, we immediately began work to remove former manufacturing and warehouse buildings from the project site. We anticipate completing the ground-up build and being ready for soft opening spring of 2022, just in time to capture the pent-up demand for hospitality and domestic drive-to traffic. The project site sits in between two major hubs for transportation, Interstate 5 and Highway 99, and is in the path of growth for the area with the recent additions of retail, restaurants, recreational, and commercial development. The Office of Indian Energy and Economic Development, Division of Capital Investment Loan Guarantee Program is of vital importance to economic development for tribes like ours. Access to capital to pursue the establishment and expansion of our economic base is difficult and challenging at best due to the many complexities of tribal organizations, along with policies that have made access to capital unattainable for Native people. Those barriers, along with competition for dollars within the tribe to provide services to their people and invest in economic development, make the Loan Guarantee Program a much-needed credit enhancement for Native people. We look forward to our partnership with the Division of Capital Investments in our newest venture in Medford, Oregon. We see the Compass by Margaritaville development in hospitality as our first step in expanding and developing economic development in Medford, with plans for additional hospitality and entertainment outlets that will contribute to the economic base for the Coquille tribe, as well as support the communities we live and do business in. Thank you.
Thank you, Denise. And so that we got one more slide. If you can go to the next one, whoops, yep. And this is lays out the different zones. And Jennifer Caesar is up in the Alaska zone with Samantha Leonard, Stephanie West with Patty Foster in the Eastern Zone. They're out in Western Virginia. Southwest Zone is Alsace Framboise with Jerry Ryburn out in Albuquerque. And Raphael and myself are in Minneapolis at the Fort Snelling complex. And David Johnson, our acting division chief, is out in the DC area. If we, again, I'm going to turn it over to David here for some closing comments, but if you have any questions, we'd be more than happy to answer them. And if you want to hold them and go back home and talk to folks, we encourage you, if you're not already a certified lender, look at some of the deals that you're doing in economic development, the startup businesses, et cetera. And we'd like to join you in that partnership, helping economic development happen, and can start the long walk with the Native CDFIs in helping to bring new capital, new ideas, new businesses to our communities, so that we get into the wealth mode and the prosper mode with the rest of the country. So David, you want to join us with some closing comments?
Sure, thanks. And this is great. I didn't get to see some of this this content previously, so it's a first for me to see the Margaritaville and hear their presentation, giving us a slap on the back. I appreciated that. There were 2 points I wanted to really emphasize here, one of which is that the genesis for this program was in the 70s, when the federal government realized that self-determination really was the future for its interactions with Indian country. And we take that to heart. DCI really welcomes the innovation and the entrepreneurial spirit that's in Indian country. We try to find a way to yes. We don't just adhere to regulations and look for no so that we can go home. I have the most dedicated staff I could have dreamed about. These folks really do try to make Indian country a better place all the time by putting their minds to improving applications and working with those entrepreneurs that have gotten a loan guarantee or loan insurance with us that run into trouble. We're accessible before and after the application is approved. I wanted to say a word too about just the funding mechanism. It's a little inside baseball here, but the way that the program is funded, it has a single subsidy appropriation which covers both guarantees and insurance. They're technically, under the law, one program. However, they have different expectations of them, and so we have to allocate the subsidy towards either insurance or guarantees. And so we begin the year out, as Raphael and David indicated, giving an allocation of what we call ceiling, the maximum number of dollars that an insured lender is allowed on their own initiative to go out and use in insuring deals that they propose and they want to close. We usually do this in buckets of $500,000 a piece. Then towards the end of the year, in order to make sure that we use every absolute cent that Congress has allocated to us, we will withdraw any unused amounts that we have allocated to insured lenders. And we have applied again to our guarantee program because we typically have more applications than we can approve in a year, so that we can use up every cent, as I say. This year, having for a confluence of strange circumstances, we didn't have as much overall authority in the program as we would have liked. And so some people on this call may have already gotten a disappointing letter from me that said we had to pull back the authority, the unused authority for insurance early this year. We're hoping in future years to give a longer leash and more opportunities. We really love, in particular with insured deals, we get to really do a lot of the startups that feed the employment growth needed in Indian country. So I just wanted to acknowledge that this year we had to pull back ceiling a little bit early, but we'll be back in October with new funds and ready to help not just our existing stable of insured lenders, but all those that would like to join because they've seen David and Raphael's wonderful presentation. Thank you.
Thanks, David. In one piece on David's explanation about pulling back some funding this year, we had our smallest budget in 2021 that we've ever had for a variety of reasons. With the new administration, we look to have we hope that for next year in 2022 we'll have our largest budget. But in having said that, in the past we've been able to when CDFIs have used their ceiling of $500,000 and they've had additional projects that they want to insure, we've been able to give them additional dollars to the tune of $250,000, $500,000 to insure other loans. So this has been sort of an anomaly for us this year. And lastly, I'll tell you that we're going to be out at RES. So if anybody plans on traveling to RES 2021 in Las Vegas in the middle of the heat wave, we will be out there. We'll have a booth out there. We're going to be giving a presentation. We're going to be talking to some CDFIs out there. So I'm sure we'll be looking at 120, 130 degrees. Bring your short sleeve shirts and hello to Andy at Clearinghouse CDFI. I'm looking forward to see you out there, and thanks for the shout out today, and nice to see that you're on this and taking it in, and look forward to working with you. Any other questions coming our way, or?
Yeah, invite anybody if you have questions. This is the time. Ask away. You can unmute yourself if you like, or you can just drop them into the chat.
I see Tawny Wilson there. Hi, Tawny. And Denise Edwards is has joined us. Denise is our new acting director of the Office of Indian Economic Development. Hello, Denise.
Hi, David. Thanks for acknowledging me. I appreciate it.
And would you like, Denise just joined our program as our director. If you'd like to say a few words, Denise, to say hello to parts of Indian country here in the economic development end, feel free.
Oh, sure. I'd be happy to. My pleasure. Chwant and Skanahay, greetings all. It's my pleasure to join all of you. I think David and Raphael and David Johnson and David Glass did an excellent job providing an overview of the loan and guarantee programs that we offer. And it's my pleasure to join as the acting director for the Office of Indian Economic Development and the chief for the Division of Economic Development. So really proud of this group and the work that they're doing with and on behalf of Indian country and all the tribes that we support and serve. So it's a pleasure, and thank you for the opportunity to provide an introduction, David.
Thank you. And Denise will be out at RES also, so meeting folks. So we look forward to being out there in a few weeks. Any other questions coming our way, Denise? Ruiz?
Nothing yet so far. Yeah, so I had the slide up, but if anybody wants to drop in their email or contact information to the chat so that people can go ahead and copy and paste it, that might be helpful in case they want to keep in touch in the future. Okay, if there are no
We're
questions.
good. You got a question?
Yeah, maybe David, Denise, Raphael, if you all want to share your contact info in the chat and people can reach out to you afterwards. And I think if we have no questions at the moment, we could probably just end a bit early today.
Sure. Well, I appreciate it. And thank you again to OISTA for inviting our program to present. And we look forward to building relations with Native CDFIs. And we thank you for participating today and sharing some time with us.
Yeah, thank you all for joining us today. And we'll be closing out our event when the closing plenary, which will be at 2:45 p.m. Mountain Time. So hope to see you all there. Thank you.
Yep.
Thank you.